Today was one of the hardest days in months when it comes to reading a price action. And in your trading career, you will have your fair share of a lot of slow days, choppy days, days without any clear proper direction or setup. But I've been trading for almost 8 years now, and today I felt completely lost. It felt like I just started trading 1 or 2 months ago, and I was that confused today. And not that the price action didn't really work. The rules still are followed as they should be, but the setups just didn't really happen. There was a lot of mess, a lot of consolidation, and once the setup occurred, it was quickly in and out. So it was really hard, and it was really mentally draining. I even almost tilted at the very end of the day, and just goes to show you that occasionally you will have sporadically these few days when it's just really hard to focus and to read the price action correctly. Most of the time, the trading, once you master the price action, it is fairly simple. It is quite easy, and if you manage to stay mentally stable, the trading can be really fairly simple. But every once in a while you will get a confusing price action like today. But let's talk about what happened. Let's talk about the structure. Let's talk about the rules. How are we supposed to trade the price action correctly? Because the day started with a clearly looking trading range structure. How do we know this is a trading range? Because we were swinging from the one side to the other, from the lows to the highs. EMA is completely flat, and in this middle of those bars, we traded up into this trading range. And every time you trade up into trading range, there is a higher likelihood that you're going to break higher. And every time you trade down into trading range, there is a higher likelihood that you're going to break lower. All right. And since the price is working sideways right now, the way we trade ranges, we buy the lows, we sell the highs, and we fade the breakouts. The first setup that I marked before the market opened was this failed second entry short. Now, this was not the setup that I took, because to my liking, the price is starting to look quite like a wedge, and we are in the middle of trading range, but we are coming from the lows. So when we are coming from the lows in trading range, we are most likely heading to the other side. Okay, we push strongly above the EMA, we push back above the EMA, so you would be expecting probably a move down here. But since you pushed back above the EMA right here, and there was a first attempt to sell, pull back, a second attempt to sell, but it failed, this is now a high probability setup because EMA is holding price. This is a nice bullish reversal bar, and these are two failed attempts in the bearish direction, and we're above the EMA. So this was the first, a decent entry, but still you're exactly in the middle of the range, looking like a wedge. Not extremely easy setup to take. And market pushed higher, and you guys can see we keep making higher lows each time, and this is looking like there is a bullish imbalance. So that means that the breakout is most likely going to succeed. This was my first trade that I took for the day, because the way we trade ranges, you want to fade the breakouts. And this was such a nice signal bar. Even though I knew that I don't have a right trend line in play, I decided to take this entry because these breakouts are so reliable, and there's such a higher likelihood that you will get the scalp, that I decided to pull the trigger here, and I got stopped out. And the second chance, it worked for a scalp, and eventually it got back into the trading range. But just goes to show you that you have to respect the bullish imbalance. The trend line is valid, and yeah, I still think it was a decent chance, because a lot of times you guys saw me taking these failed breakouts all over the place. 8 or 9 times out of 10 it will work. So I'm going to take the entry right here, because if you pick and choose too much, you will suffer analysis paralysis, and you will never take any trade in the future, because you can always find a reason why not to take a trade. So you have to follow the rules. You cannot cherry pick, and I decided to take a chance here. But market pushed lower. This is the first break of this uptrend, so there is most likely going to be a break in the new extreme. But we are above this trading range, so you are expecting for price to push all the way down here. So there is a second entry long, but this is a horrible doji signal bar. You're not touching the EMA, so you cannot take this entry. Plus, you're expecting for price to go all the way to this trading range anyway, because this is how trading range reacts. And by the way, you can draw a trend line something like this, but this is not a proper trend line, even though it fits nicely off the top. Remember, we already talked about this. In trading ranges, bigger patterns, they just don't work. You need to follow only the shorter term ones. All right, so even though this works nicely off the highs and off the lows, this is really not the way how you look for patterns, because you look for bigger patterns when it comes to trends, not trading ranges. And this has been such a sideways trading range. This is why I like taking a chance here, because When you're in a trading range for such a long time, and we've moved for so many hours, this is really wide trading range, there's a really high likelihood that those breakouts are going to fail. And today it just took a little bit of time before market pushed lower. Unfortunately, you cannot pick a top here. You have a break, 2 legs to a new extreme, tempting to take a sell possibly. Market pushed below EMA, which is indicating strong bearish momentum. You're heading all the way back into this trading range. There's the trend line. There's a first break, new extreme, but there is a new low, first entry short, pullback, second entry short. You have a micro double top. EMA is holding small little bar, which is a good when it comes to a volatile day. This was my second trade that I took. First entry short, second entry short, uptrend played out with the break and the new extreme. So you know that you're safe looking for sells. The EMA is holding. You're coming from failed breakout, which a lot of times generates strong momentum. Every time you come from failed breakout, you have to expect a strong momentum in the opposite direction most often than not. Nothing is perfect in price action, but you need to put these rules together and follow them. And in the end, in the long run, the odds will work on your side. All right. So this is a nice high probability setup. This is the two-legged pullback that you look as a trader for. But then started the day that I really didn't like trading, because take a look what happened. After the new extreme was formed, again, price just started consolidating. At the time, I found my trend line off the lows, something like this. I put it here, and I was looking to take a, this was the trend line that I found. And I was about to go short here off this trend line and off the resistance right here, which would be 2 key entry points. But by that time, the market is extremely choppy, overlapping bars, a lot of stims, a lot of dojis. EMA is exactly in the middle of those bars. And this is what it's called a congestion. You cannot trade a congestion like this. You have to sell it, watch it go without you. And then you have a failed breakout all the way down here with the first bullish bar, but you cannot, you already move way too far down. When you're fading these breakouts out of these congestions, you need to take the breakout right after the congestion. Okay, so you have a first break, and you have a first break of this bigger channel, so you would be expecting for price to create a new extreme. It pushed back below EMA, which would be indicating a bearish pressure, so you're looking for shorts, but it pushed back above the EMA. And look what happened. Once again, same thing that happened right here, that happened right here. EMA is completely flat, bunch of overlapping bars just going sideways, no clear direction whatsoever. You cannot take an entry in this. And this is where you're starting to slowly get agitated, that the market is starting to get really weird. The market pushed higher, there was a failed breakout, it worked. But by this time, the trend is up because we keep pushing above the EMA. Take a look how you're making higher lows, higher highs. You keep pushing higher above EMA. So I'm not a big fan of this. And then you have a new high, first entry long, pullback, second entry long. Trend line is holding. By that time, you get 3 confirmations of the lows. And this is the 4th confirmation. So you know that this trend line is valid. And now you have the key entry point where the high probability setup will occur. And this is a 2-legged pullback, which is a high probability setup under right circumstances if you combine it with the proper key entry points as a trend line, support resistance, or EMA. So you have a 2-legged pullback, beautiful bullish reversal bar. But take a look, 1, 2, 3, 4, 5, 6, 7, 8 bars. My hand was really itching going long here. But once again, a lot of choppiness, 2 key entry points out holding. It is a breakout pullback pattern, so this is even better. I was really wanting to go long here, but I just cannot take a chance in this congestion. Quick, easy scalp. I mean, it wasn't easy. You had to ride this out before your scalp was filled. By the way, this is why we mainly go for scalps, because they're so reliable. If you're trying to swing trade, you need to your win percentage will go low, will reduce, because it is hard to catch a gigantic swing trade every single time. All right, market push lower, break, new extreme. So the downtrend played out, market push back up. Take a look what is starting to happen. It was a clear trading range with static lows, static highs. There was a little bit uptrend, a little bit downtrend, and take a look what is happening now. Strong consolidation. EMA is getting completely flat. There is no clear support or resistance. It keeps, oscillating in the weird directions. So you pushed above the EMA, you have a little break, new extreme, you have a new high, Micro double top resets the count, so I'm counting over from this point on. I have a first entry long, pullback, second entry long, failure, big bearish bar, micro double top here. I wanted to go short here, but I didn't even prepare my order once I typed it, and it already went out without me, and it made the scalp. So once it makes the scalp, you have to cancel the order. Market pushed higher. I wasn't looking to go short here. I just marked these two trades in hindsight because this resistance keeps holding so nicely, and you're very close to this main key level, which could be a little bit lower. So this is a strong resistance that is forming here. So you're expecting for price to push lower, but once again, EMA is completely flat. This is getting very tight, and these are big bearish bars that close below EMA, and it's basically a triple repeat pattern. This is why I like marking it, only because it is a repeat pattern. But once again, the price action is starting to get very choppy, and when you see consolidating structure choppy like this, you won't really want to stay away from trading. Market broke lower, but you have 1, 2, 3, 4, 5 bars going. Look at these bars, they're stacked next to each other. There is no room, complete congestion, a lot of stimps, a lot of dojis. I don't like going long here. I don't like even going short here, to be honest with you, because this is the congestion. You have a new low, first entry short. You pushed back above this support. You pushed back above the EMA. So your first instinct would be to look for failed second entry short. All right, because you pushed back above this, smaller trading range, and you're above the EMA, but it never happened. There was just a second entry short that worked, but you cannot take it because you're above the EMA, and it just pushed lower. You have a first leg to a new low, pull back second leg, but there can be a bigger pattern like this. Let me see. Yeah, it fits fairly nicely, but I don't really like it. I like using the short-term ones in the range, and this looks like a two-legged move to a new extreme. You have a strong key level that is holding right here. I'm going to mark this trade. This was quite tempting at the time, but I didn't really like pulling a trigger here yet. I was expecting a few more pushes lower, or just some sort of higher low here, right here. It never really happened. Higher low happened all the way up to here, but this is a big bullish and engulfing bar, so you don't want to enter at the very highs of this move. But you have a break, 2 legs to a new extreme, and that tells you that the downtrend played out. And then you have a new low right here, first entry short, second entry short. So you'll be expecting going long here, but this is a doji. It ended like a doji, and we first triggered lower and we traded up lower. So this confirmed the bearish momentum, and this looked like the second entry short is going to work, but it suddenly quickly engulfed the bar and traded up higher, and then again it traded up lower. And this is why it's so dangerous to trade the engulfing bars. I really like entering the bars once I see them finished, and it's starting to get once again confusing here. You pushed lower, you pushed back up, you are making higher lows here, and there is a kind of like a new low, first entry short, second entry short. You're above the EMA, but you're starting to get stacked. You would go long directly into this resistance, and by the time you get a trap, one tick lower, it reverses. This is gigantic bar. Once again, 6-7 bars just stacked next to each other, overlap. Then you have a breakout pullback pattern, first entry long, second entry long right here. This was the trend line I had at the time. So you have a two-legged pullback to the trend line, but you're going long at the very high. It is looking choppy, and same thing happened right here. Complete choppy consolidation. This one is a little bit better because you broke lower, and this is that breakout below the congestion. That's how you trade congestion. You fade the breakout, and this one is with the direction of a trend. Okay, this is the uptrend now, so you want to fade these breakouts. You don't want to fade them when they break to the upside and you want to sell. No, you want to fade them, buy them when they break to the downside, because it confirms the trend line, it confirms the EMA. This is the key entry point, 2 key entry points, reversal bar, fairly decent. I wasn't even looking at the chart. I was a little bit busy, so I didn't even notice this at the time. It was already too late. The scalp was made by the time I noticed, but this is one decent entry of the day, failed breakout. This one and these early entries are decent. All of these entries are quite choppy and overlapped. And then, as you keep making higher lows each time and higher highs, You know that this is starting to be uptrend form. This is not a legit trading range. This is now starting to be an uptrend form. You're coming from the very low. You keep pushing higher. And when you're in an uptrend, the high probability setup is a two-legged pullback at the key entry point. Okay? But there is no two-legged pullback. You only get a bunch of first entries, new high, first entry, new high, first entry, pullback, first entry, little second entry, but you're going long at the very high of the move. You cannot go long here, far away from EMA. New high, first entry long, new high, first entry long, new high, first entry long, sort of like a second entry long right here, but far away from any key entry point. And this is why today was so tough. You never got any clear setup. Most of these setups were choppy, and it was really hard to read. And it may be just me, because a lot of times you will feel like the market is hard, and it's maybe just you because you got something emotional going inside of you. You cannot see the price clearly, but I know that other traders saw the price and they were really confused today as well. And I'm going to draw the shortened trend line so I know where it is a break and a new extreme. You never need it on the first entries because you never want to take first entry, so I'm going to draw them anyway. But when it comes to first entries, you still need to wait for the second entry for the break and the retest, which you never get. But here you have a break, new extreme, and you finally have a first leg pullback, second leg. This is a two-legged pullback. This is the setup. This is the high probability setup. Two-legged pullback, small little bullish inside bar. Your stop loss go below this bar. Below this bar. When you're trading inside bar, your stop loss has to go below the bar that is outside of the inside bar. The bar that is inside of the bar, your stop loss has to go below this bar. Okay. I like taking inside bars because they allow you enter basically right here, so you have a few ticks to spare to target profit, and your stop loss is much smaller. So this would be a decent entry, break new extreme. And since you keep pushing higher so strongly and you keep, the trend keeps working, you have to find some sort of bigger, wider pattern. And that's when the last part of the day started, where I was really confused, because at the time I had one of my trend lines. First I had trend line something like this. Let me just delete quickly. I had trend line something like this, and I thought this is a break. And then, but since price kept kind of working and nicely pushing above the EMA, if you just slightly tilt it like this, this looks like the trend line holds nicely. Okay, and this is overall uptrend, so looking for a larger pattern is a smart idea here, because this is how 99% of the time you will find your high probability setup, especially after this first leg pullback, second leg confirmed it right here. So you have a new low, first entry short failure, higher low, quite tempting. Had this bar closed a little bit more bullish and above the EMA, this would have been great entry. There's a failed second entry short, but this is the engulfing bar, so you have to go long above this bearish bar, which I'm not a big fan of entering above bearish bars like this when it comes to trap. I know that some traders like it. I really want to wait for bar to finish, but by the time this engulfing bar finishes and it confirms the failed second entry short, you're going along at the very high of the move. It's way too big. You don't have enough rooms right here. And then this first entry long, second entry long, kind of like a higher low setups, and it setups at the key entry point, the trend line, and EMA holds. I almost took it. I even prepared my limit order and I exited at the very last second because I just didn't like how stacked up the price was. EMA is starting to get in the middle of those bars, and I was starting to already get agitated. So I decided to cancel the order here, but I'm going to mark it because I know the traders took it and it looks really, really tempting. But the price is really starting to get choppy. We were really supposed to push higher above this bar, and the fact that you cannot enter above this bar trigger, you have a bearish bar, then you have the bullish bar, EMA starting to get really flat. But this was just one of those days that it was really confusing. None of the clear setups I feel like worked. Okay, every single setup was really choppy, and it was just hard to read overall because market then pushed lower, and there was really no clear static support either. But this was such a strong uptrend that I was still expecting for price to push higher. And you have a new extreme, first entry short pullback, second entry short failure. This is a horrible signal bar, and this was where I started to get fairly tilted. I entered this bar 1 tick back, I think, or 2 ticks back, and I entered this. I knew it was very risky, and I only went for 6 ticks here because I was taking a really chance. I was 1-to-1 for the day, and I knew that I'm not going to hang on and keep trading. So this was my last trade, so I only went for 6 ticks. It barely worked. Had I gone for 8, this would have been a failure. So once again, this would have been a tricky trade, but this is not a great signal bar. You haven't really closed above the EMA. You're taking a chance if you're entering this trade, and I knew I was taking a chance. I was just playing the probabilities like in a casino here. The market pushed lower. The support seems holding. First entry long, pullback. Second entry long, 2-legged pullback. You have a little break, new extreme. Support keeps holding. 2-legged pullback, big bullish bar. Quick, easy scalp. This is the high probability setup, but I didn't take this trade. I was already done, and I was already quite tilted here. But market, I was expecting still for market to push higher, but market just reversed to the downside, and by that time you need to adapt. And let me see, there's a new low, first entry short pullback, a second entry short. So we got the second entry short, but the bar is horrible. So we got here nice bearish inside bar, and see, this would have trapped you again. So this was just even when you're not trading today is really choppy. But by this time, this is already too congested. Once again, a lot of overlaps. This doesn't really feel right. Plus, I kind of like drawing the trend line like this. So you have to be careful. You have to be careful. This is a rare day. A lot of times the trading is, fairly simple and fairly easy. But today, just a reminder, there is going to be a day here and there where you will just won't feel it. You will be a little bit confused. The price action will be, messy a little bit. There's not going to be that many easy setups, but it's just part of this business. Not every single day is going to be easy, and you have to sit here through these bad days so you expose yourself to the easy days. And that's the same thing with losing trades. You have to take the losing trades so you can, be available to taking all the winning trades. So there's really nothing else much to overthinking this. That's just part of the business. Not every single day is extremely easy. Most days are though. So just forget about this day. Take a deep breath, keep meditating, and you have to come back strong tomorrow, because a market is going to clear up and there's going to be much easier days. And if you stay mentally stable, you will be profitable in the long run. All right. So I hope you didn't have a bad day, and even though today was quite confusing. So let me know in the comment section, how did you guys feel about today? If it was easy for you, or it just maybe me, something mentally me today that caught me off guard a bit. So I'm going to talk to you next time. Take care, buddy.